You're watching Dukascopy TV. I'm Elaine Stenson. Disappointing figures from Japan today as a large trade deficit and a disappointing increase in exports announced demonstrates some of the challenges facing Japan as it seeks to reinvigorate its economy after years of listless growth. Marco Wagner from Commerzbank in Frankfurt joins me now on the line. Marco, what was your response to the figures released today? Should we be concerned?
Well, we, as well as many other analysts, have indeed forecast a trade deficit of this extent for September. However, the data were not so bad at all, I have to say, as the trade balance is a highly volatile data series. And I'm pretty sure that the decline in trade balance has bottomed out. Additionally, with regard to the export data alone, they have indeed been lower than analysts have projected, but this also does still not pose a break to their clear upward trend.
Plans have also been announced to raise Japan's sales tax next year in a bid to tackle the national debt pile, which earlier this year topped $10 trillion for the first time. Do you think the sales tax is a good idea right now?
I think there is no alternative for the Japanese government. Of course, despite cutting government expenditure, but the government does not want that. That's clear. The moment for the sales tax is insofar right as the economic growth is strong enough to tackle that. And in addition, it is also strong enough to convince the lawmakers, and here in particular the Prime Minister Abe, to go this step. But anyway, the tax hike by 3 percentage points will not be enough to get the fiscal finances in order. Here, even with the additional revenues, the fiscal deficit will still be substantially negative. And of course, as a consequence, the public debt then will further increase, but only at a slower pace.
Japan's trade deficit swelled to 932 billion yen in September. In the short term, could the yen weakness, along with growth in imports, help recovery in the Japanese economy?
The problem with the trade balance is that due to the high oil and gas demand of the Japanese economy, the imports are and will remain high for the time being. But simultaneously, the data indicate that the weakness of the yen pretty much fostered the Japanese exports. Just as an example, the real exports have increased by more than 3% each in the first and the second quarter this year. This, of course, increases business confidence and their profits, which in turn they invest. However, the yen-driven exports can only promote the economic growth in the short term. In the medium term and long run, the sustainable growth of the Japanese economy will only be possible if the government performs structural reforms, and here in particular on the highly inflexible labor market. But to my mind, this is very, very unlikely to happen.
Marco, thank you very much for joining me on the line today. And that's all from me today, but do check back later for more updates and interviews from the TV team. Bye for now.